By default, any coach starts by being a sole proprietor or a partner, and it can stay like this for the remaining of your business life unless you decide to choose another legal structure. A sole proprietorship, it's one owner business type, and it's for sure the simplest and least costly way to structure your business. By default, any one-person business that has not filed papers to become a corporation or an LLC, it's a sole proprietorship. There are no forms to file and no other requirements. However, because it is a business and it operates as a business, in a sole proprietorship there are a few rules. One, it's possible that your local government, like the city in which you operate or in which you are located, will require you to obtain a local tax registration, a license, or a permit. Or it may regulate what kind of signage you may display for your business if you have a brick and mortar place. However, these bureaucratic details cannot be viewed as part of a process of starting a sole proprietorship because in essence, there is no such process. A sole proprietorship is the default legal status for any solo person who engages in business. Then all profits will go directly to the owner. Ownership must be limited to a single owner or a married couple, and that's it. The taxable income of the business is subject to both income and self-employment tax because you work for yourself. The major disadvantage is that all legal and financial obligations incurred by the company are passed directly to the owner. In other words, if your company gets sued for any reason, you are personally responsible for answering the lawsuit. You have unlimited liability for your business's debts and legal obligations. Mistakes can cost you not only the company, but everything you own depending on the laws of the state in which you reside. So it's just a matter of which state you live in the United States. For example, in Florida, they cannot come after you, your primary residence, even if you get sued. But in other states or countries, that may be different. In this case, liability insurance is strongly recommended. So if somebody sues you in Florida, sues your business, well, it sues you because you're a sole proprietorship, then, they can get everything. They can get money, they can get all this stuff, but they're not going to touch your house, right? So it's recommended for all business legal entities, but especially for sole proprietorships, to get liability insurance. And we are going to talk about that in a next lecture. Because it's important that whoever sues you cannot come after your properties or after your personal income. On another hand, the good part about a sole proprietorship is that it's easy to close and walk away, assuming that there are no outstanding creditors to be paid. Sole proprietorships are the most popular form of legal structure in the United States, with approximately 3/4 of all businesses in America being sole proprietorships. If you are a freelance photographer or a writer or a craftsperson or a personal consultant or a contractor and you have not filed papers to create an LLC or a corporation, you are automatically a sole proprietor, and it makes no difference if you have a day job or you don't. This comes as a surprise to people who don't see themselves as self-employed or business owners, such as fitness instructors, life coaches, health coaches, even musicians who have a gig and play, at some place every month or so. But you are. What is clear is that it should be that as long as you work for yourself, you are a sole proprietor, right? Whatever it is that you do. If you choose to structure your entity, at least at first, as a sole proprietorship, I have a few things that I needed to remember. Do not ignore local registration requirements and local rules. You may not need to register legally your business to make papers for it. However, in the United States, most cities and many countries require businesses, even tiny home-based sole proprietorships, to register with them and pay at least a minimum tax or fee. So look at the city level or the county level, even if at the state level is not required. If you do a business under a name different from your own legal name, known as a DBA, doing business as, or a fictitious name, normally this name has to be registered with your county. To be honest, I know many small businesses that ignore these requirements without consequences so far from the ones I know. However, keep in mind that if you are caught, you may be subject to back taxes and fees and other penalties for not registering that doing business as. Also, skipping these formalities may result in other problems like not being able to open a business bank account. And we will discuss the business bank accounts with all the banking information, their advantages and disadvantages in the next lectures of the course as well. Then you have to be aware of taxation and liability issues. In the eyes of the law, a sole proprietorship is not legally separated from the person who owns it. And like we said, this is the one fundamental difference between a sole proprietorship and a corporation or an LLC, and has two major effects. One is related to taxes and one is related to personal liability. We have two sections coming up in the course addressing taxes and liability insurance. So please, these are very important parts in you becoming an entrepreneur the way it should be, to setting everything in place. So please pay attention to the next course, the next sections of the course, and take notes, do your research, and make sure you are prepared. Let's go to our next lecture.